yet. Well, you all know Dr. Nouriel Roubini, our friend from NYU, who predicted the financial mess back in '06. He says the U.S. slump may end around the end of the year. Overnight, we got some evidence that maybe we're going that way. Consumer confidence bumped way up. The conference board said we are well north of 50. Our happy days back once again. The original, the one and only, Marc Faber, the Dr. Doom of the Gloom, Doom, and Boom Report, is here with us on the show today. Guten Tag, my friend.
Yes.
How are you?
Hey, very well. Yourself?
Well, you seem like
nice to see you.
You're a jolly good fellow today.
Yes, I'm always happy when I see you.
Oh, I'm so happy to see you. How are things looking nowadays? The conference board announced the consumer confidence figures in America are up. Oil prices are up. People are happy days are here again.
Well, I think everything is relative. I think, as you know, the economies around the world collapsed and fell off a cliff after September, and they probably soft and bottomed out in March. And there's a bit of rebound at the present time economically. But I don't think that you will go back anytime soon to the type of growth rates we had in 2006, 2007, nor to the type of prosperity we had at that time. So yes, maybe you have a rebound from a low level, but I think there's still a lot of clouds out there. The financial markets may move in a different tune. That is a totally different story from the real economic world.
Roubini, you know Roubini. Do you talk to Roubini?
No, I don't talk to him.
You're mad at him. You're still mad at him because they call him Dr.
No, not at all. Actually,
all right.
We were at conferences together, but we never really met. And I seldom go to New York, and he also travels a lot. But I have great sympathy for his writings. I think he's a very good economist.
And I don't think he doesn't come to Chiang Mai, Thailand very often.
I don't think so.
Big cities there. He says the U.S.
Nor does he go out at night to the same places I go to.
But we'll talk about that after the show. I want to know where you go, actually, because I want to be happy. I want to be as happy a guy as you are. Where is the? He says the U.S.-led mess recovery might be by the end of the year. It's sort of a change of tune on his part, it seems.
Well, on his part, certainly, but you have to understand what is happening in the industry and among forecasters. There is a chance that the huge inflow of liquidity into the system, driven by easy monetary policies by the Federal Reserve and other central banks, combined with growing and huge fiscal deficits, in other words, budget deficits, that they can lift temporary economic activity somewhat, and that they can lift stock markets. I mean, the S&P is up 39%. Lots of stock markets are up 70% since the March lows. And so it's very tough for a forecaster who was ultra bearish to stay bearish. Because if he's wrong, then he has a reputational risk. It's like a fund manager who missed this rally. For him, the pressure to invest over the next couple of weeks or months, whether in a correction or in a further market rise, is huge, because the clients say, the market is going up, many stocks have doubled, and you're in cash.
Right. It's basically going where you don't want to go. It's riding the momentum, because otherwise your peers are going to look good and you're going to look like crap.
Precisely. You're right.
Look, we better start taking some questions, because I've only got about 200 to get through today from viewers. It's going to be hit or miss here, because we got just so, I mean, the sheer volume coming in today. So I'm just going to start picking and choosing. Here's one here from DJ, okay? This is the one from Las Vegas here. I flagged the team, too. He wrote in a little bit earlier. DJ writes in from Las Vegas, Nevada. Because it dovetails with what we're talking about. Worldwide equity markets have run up. Is that nothing more than the result of central bank and government intervention and maybe message management or PR creating a super bubble completely disconnected with what's going on in the economy?
Well, I think that's a very good point, that occasionally you can have equity markets moving up very strongly in nominal terms, and they move up with a disconnection to the real economy. In other words, the real economy in the world, I don't think will go back to the 2006, 2007 levels of prosperity or heights or industrial production, but the markets could go up essentially and theoretically make a new highs if you print enough money.
But is that what they're going through? I mean, so it sounds like you're leading into an inflation discussion here.
Well, yes, I think that people say, well, this is a bear market rally, or there's no fundamental reason for this increase in equity prices. Well, money printing and fiscal deficits is a fundamental event. And if I throw money at the system, say in this room, if I double the supply and the quantity of money, and I create a huge deficit, I can create a mini boom. Not a lasting boom, but a mini boom, a crack-up boom that then explodes at some point.
Okay.